All attendees are in listen-only mode.
Good afternoon, everybody, and welcome to this presentation on Gift Aid, the basics. I'd like to thank you all for joining us today. My name's Andy Cowie. I'm the Marketing Director here at James Cooper Creston, and quite frankly, I know nothing about Gift Aid at all, which is obviously why I'm sitting here with my partner, Ian Miles. Ian is a partner within our specialist charity team and indeed a trustee of a local charity who, over the course of the next half an hour, will take you through the presentation, a quick half-hour trot through of Gift Aid. Throughout the presentation, we'd welcome your questions. There is a box to type your questions into. If you can put that in, we'll kind of cover those off at the end. What I would ask at this point in time is I could just be sitting in a room talking to myself. So if some of you can just type me a quick question, say that you can hear me, then we can kick this off fully. Perfect. Thank you very much for that. Okay, so with no more ado, I'll hand you over to Mr. Ian Miles and enjoy.
Thanks, Andy, and good afternoon, everyone. As Andy said, I'm a tax partner here at James Cooper Creston. I've been here 10 or 11 years now, and I'm a charity trustee of a charity that fundraises. So I see this from both sides. So first of all then, what is Gift Aid? I'm going to go through some of the real basics to start with, and then we'll do a little bit of building on that. And if you've got subjects on Gift Aid you want me to talk about at a later date in more detail, then please let us know. Okay, so Gift Aid is a mechanism that enables charities and now community amateur sports clubs to reclaim tax on cash donations made to them. It's important, it's a cash donation. So there are other mechanisms for shares, land and other things like that. But this is, what we're looking at here is cash donations. What it means is that if it's an effective donation under Gift Aid, the charity can reclaim an additional 25p from HMRC for every £1 in cash that's donated. In addition, higher and additional rate taxpayers get tax relief. Basic rate taxpayers get nothing, and if you're not a taxpayer at all, it will cost you. So clearly the people who probably have the most disposable income to give will be additional and higher rate taxpayers, and my suggestion is that you certainly don't hold back from letting them know what the tax relief that they can get will be, and we'll look at that as one of the slides a little bit later on. In order to be able to claim it as a charity, you must be registered with HMRC as a charity or community amateur sports club. Okay, so what can you and cannot you claim Gift Aid on? So it's on donations made by individuals, and there is no limit on the amount that can be donated. So it is an uncapped relief in effect. There can be no condition as to repayment. So for example, if somebody makes a loan to a charity that is then not repaid, but it is then written off, that is not an effective Gift Aid donation. So you're far better off repaying the loan and then having them donate the cash. It can't be deductible from income as a trading expense, so that would be having your cake and eating it. So it's got to be a donation and not part of a tax deduction anywhere. And it can't be part of an arrangement for a charity to acquire property from an individual or connected person. So I can't give money to a charity which they then use to buy land from me or from my wife or my mother or anybody else who is connected. Now, Gift Aid isn't claimed on donations from companies. That is because the mechanism for a company works slightly differently. Companies can use it as a deduction, effectively a charge on their income, and so they get a deduction from their corporation tax bill. So again, you can't have your cake and eat it. So when you get £100 from a company, it's £100, not £100 plus the Gift Aid. What's not a gift? Okay, some of those are perhaps obvious, but the payment of school fees for a specific purpose, that's can never be something under Gift Aid. A payment to purchase items, whether it's books, food, etc., clothing, that's never a payment under Gift Aid. You can't Gift Aid your way into an event such as a concert or a dinner if you pay the price on the ticket. And on tickets, payments of raffles or lotteries, including 100 or 200 clubs, those are not eligible for gift aid. So, how do you make a gift aid declaration? Well, it can be made in writing. That's, I think, is the most common way of doing it. It can be made online, and it can be made orally. I personally think the oral ones are quite difficult because you've got to go and do other things, and we'll come along to look at those in a minute. So what do you have to have in your gift aid declaration? It must contain the name of the charity or community amateur sports club. It must have the donor's name, at least a minimum of their initials and last name, their home address, and at least the house number and postcode, whether the declaration covers past, present or future donations or just that particular one. And it has to have a statement on the form that the donor wants gift aid to apply, and that could be a tick box on an email or on an online declaration. Now, what the revenue say is that every couple of years you should probably check that the donor's address hasn't changed. If it has, you don't have to get a new gift aid declaration. You can stick with the one you've got, but what you have to have is some evidence from the donor that they've moved from address 1 to address 2, and just keep that with the gift aid form as evidence, as an audit trail if HMRC come along and do a gift aid audit. So that's the declaration, the current one that should be on the gift aid form, which says I'm a UK taxpayer. It doesn't say I'm a UK resident, so it's open to non-UK residents, and that I have to pay, effectively I have to pay sufficient income and or capital gains tax. People were saying, well, of course I pay tax, I pay council tax, I pay VAT on the things I buy. And what that's saying is that if I pay less income and or capital gains tax than the amount of gift aid claimed on all my donations, then I've got an additional liability to HMRC. So for somebody who is not a taxpayer, for whatever reason in this country, if they don't pay any tax in a year and they make a gift aid payment, then they've got some tax to pay to HMRC. Okay, so you don't have to keep them in paper form anymore. They can be scanned and the originals destroyed. You can't simply take a transcript of a declaration and type it into your own database. And the gift aid form must be capable of being viewed and printed should HMRC wish to see it as part of one of their audit. If somebody gives you an oral declaration, then you must either keep a copy of the audio recording, or if you don't do that, then you have to keep a record of when the letter was sent to the donor confirming the verbal declaration. And what HMRC say is that in the letter to the donor, you should include all the details the donor has given in their oral declaration, the explanation that they have to pay sufficient income and or capital gains tax, an explanation that they have the right to cancel within 30 days, the date on which they gave the oral declaration, and the date on which the charity sent the written record to the donor. Interestingly, you don't actually have to sign a gift aid declaration. Some charities prefer it because they think it shows more of a commitment, but it's not a revenue requirement. If declarations are cancelled, then you have to keep a record of the cancelled declarations, including the date on which they were cancelled. Okay, so how long do you have to keep records for? So charitable trusts and community amateur sports clubs must keep their declarations for 6 years from the end of the tax year to which they relate, if it's a one-off donation. Companies have to keep it for 6 years from the end of their accounting period. And if you've got an enduring gift aid, which is, I'd like this gift aid declaration to cover all of my gifts in the last 4 years, this gift and all the gifts I make to you in the future, then you have to keep that for 6 years from the date that the last donation was made under gift aid. Okay, so you can make gift aid claims either online or on paper, and those are the response times from HMRC. Whichever method you use to claim, then you have to include a schedule where you can see how the gift aid claim is made up, how the donors relate, and the donations and any other income on which you're reclaiming tax must be entered there. Okay, so making a claim online, you have to be registered as a charity for tax purposes with HMRC, which means you have to have an online account with HMRC and have charities online added to that account. You have to add a schedule as part of the claim, and you can either use the revenue schedule, which will take up to 1,000 donations, or if you've got more than 1,000, then you must use commercial software for that purpose. On paper, you can use form CHR1, which is available from HMRC, and it has to be signed either by a trustee or an additional authorised nominee on behalf of the charity. And HMRC have put additional checks in place to reduce the risk of fraud, to make sure that claims are being signed by people who are authorised to do so on behalf of charities. Okay, so the time limits for making claims. Charitable trusts can have 4 years in which from the end of the tax year in which to make them, and charitable companies have 4 years from the end of their accounting period. So that means if somebody gives you a gift aid declaration today, which says I want it to cover all claims that I've made in the past 4 years, this current claim and all of my claims in the future, and let's say you've been timely with your claims for previous years, so clearly previous year's claims haven't included gifts that this individual has made, you can then go back and pick up those payments as gift aid payments now that they've given you the valid gift aid declaration. Okay, so you can make claims as often as you want, but if they're small claims, then they may not get paid out and they may get aggregated on the annual basis. If an oral declaration is made and you don't have an auditable recording, then you can only make the claim once the written confirmation has been sent out. Frankly, if I'd had a big claim from a donor and they'd done it by leaving a message on my mobile phone, I would follow up and get a written gift aid form done, and if they were likely to give me another declaration or to move address, then I would make sure that I kept tabs on that particular donor. If you've got small claims of up to £20 each, you can aggregate those, but and up to £1,000 an entry, but keep a sensible descriptor and make sure that you've got the detail held behind it in the charity office, so that if the revenue come along and say, okay, you've made an aggregated claim, please show me the detail behind that, you can produce the detail. Okay, so where people are sponsored to take part in events, such as somebody sponsors me to do a fun run or something like that, then you have typically a sponsorship form, and they say how much they're going to sponsor you for, to do whatever it is you're going to do. The gift aid declaration can be incorporated into the sponsorship form, and I said earlier that people had to give as a minimum their initials and their name, their house number and their postcode. That is the whole point behind the sponsorship form. The revenue recognise that people may not wish to write all of their personal address on a sponsorship form where it could go around, anybody could see it. So they allow you to just give those details, and you can put a tick box on there to say I want this done under gift aid, and that's fine. The other point I think I would make about that is I have seen sponsorship forms in the past where somebody has put their work address, it's been passed around the office and everybody's put ditto marks under the work address and the whole lot's invalid. So please make sure you get people's home addresses. When the charity makes the claim for the gift aid, then it needs only make a single entry for that individual on their claim form, and they can keep the detail in the background, so retain the sponsor sheets. And indeed, when the sponsor collects the money, if the sponsor collects, say, £1,000 for whatever it is they've done, they can bank it in their bank account and then make one bank payment, whether it's by cheque or direct transfer to the charity's bank account, all they should do is make sure that the amount of money in equals the amount of money out. Small donation scheme. Typically, this is your type of church plate scheme where there are donations on the plate. It currently applies to small donations of not more than £20, where a charity can claim on donations of up to 8,000 in aggregate in any tax year. That's 8,000 net in effect. So you get 8,000. The basic rate of tax, if that was net of it, would be 2,000. And they can claim up to £2,000 in any year from the 6th of April 17. There are conditions. The charity must have claimed normal gift aid in the same year. They've claimed it in at least 2 of the last 4 years, i.e. you can't have a 2-year gap. And they may not have had a penalty in the last 2 years. And the claim under the small donation scheme cannot be more than 10 times their gift aid claim. I would just add there, it's of benefit to the charity, but not to the donor. Because if you go and put £1 on the church plate, you can't use that as evidence that you have put £1 on the church plate. If you put your £1 in an envelope, on a gift aid envelope, then that's a different matter. Okay, now we're now going to come on to donor benefits, and I've got a question that I'd like to ask you, because people get worried about donor benefits, but the question I'd like to ask is, are donor benefits really a problem, or is it really just academic? So if you think that donor benefits are a problem to your charity, then please answer yes, or if in reality they're not a problem, please answer no. So, under the scheme that went before gift aid, where people used to donate to charities under deeds of covenant, a deed of covenant had to be what was known as pure income profit in the hands of the recipient, so that you couldn't provide a benefit. The gift aid scheme is rather more relaxed, and you can provide benefits to donors up to a limit and still claim gift aid on their donation. So there is a catch-all, of course, and that is that if the benefit is provided to either the donor or somebody connected with them, it counts. So I've defined connected. It means the donor's spouse or civil partner, a relative, a spouse of a relative, or a company under control of a donor or someone who is connected. So it's got quite, as you can see, it's got quite a wide definition, and how you would ever know that you have provided a benefit to somebody who is connected to a donor, I think is actually quite a difficult thing. Okay, so a donor benefit is something that is provided to a donor or someone connected with them as a consequence of the donor's gift. So if you give somebody a benefit to induce them to make a donation to the charity, that is not caught by the donor benefits rule, because the benefit in that case will come before the donation. So it's only where a benefit is provided as a consequence of the donation. So there's some things that don't count as benefits. So if you're running a concert and somebody gives you a donation to sponsor it, then an acknowledgement in the programme is fine. If you pay to go into a property and you pay at least 10% more than the normal entry fee, and the right of admission is for at least a year, then that is not a benefit. So, for example, the last time I went to Kew Gardens, I took the gift aid route, I bought an annual ticket, I paid 10% more than I would have to have done just to go and see it for the day, and actually, as we'll come to look at it later, it's cheaper than just paying the price on the ticket. Family rules can apply. So family rules normally mean up to 3 adults and 6 children, and there's no real requirement for the charity to go and check their passports to make sure they're all part of the same family. You're not expected to do that. If you have a donor and you have a dinner or something like that in honour of the donor, that can probably qualify, provided it's a large enough dinner So if you made a donation, had a donor who made a donation to a charity, and you had a small private dinner for the donor and their immediate family, that doesn't qualify. But if they're simply invited to a large fundraising dinner and they're named as being a donor at that dinner, that probably does. The last one on that list, naming rights, absolutely fine. The revenue recognise that there is no benefit. So I was involved with a boat club at one stage, which had a fundraising dinner. It was charitable, and they just bought a whole load of boats, and so we started an auction after dinner to name the boats. And tables were gathering together, so it was slightly tricky to work out who'd actually contributed and in what proportion, but inevitably we got them all to sign gift aid donations, and so that added 25p in the pound for the name of every boat that was auctioned. Okay, so we'll have a look at some of the limits. There are two tests for donor benefits. The first is the relevant value test, which is a maximum benefit for an individual donation, and the aggregate value test, which is that the aggregate value of benefits in any tax year, so that's a tax year ending on the 5th of April, must not exceed £2,500. And I've got a couple of slides to illustrate that, and that's been in place since 6th of April 2011. And you have to pass both tests. Where you get a benefit that's for less than a year, then there are annualising tests, which I'm not going to go into today. So, the relevant value test, if the amount of the donation is up to £100, then the maximum benefit you can have is 25% of the donation. If the donation is between £101 and £1,000, it's £25. And over £1,000, it's 5% of the donation, up to a maximum benefit of £2,500. So here's an example. These are a series of donations that somebody has made in the year ended 5th of April 2017. So if we just go through those, on 6th of May, they make a donation of £30, no benefit. So that's absolutely fine, can be given under gift aid, passes the relevant value test. On the 21st of June, at £10, that's the same, that's fine. On the 18th of August, 25, that is the same, that's fine. On the 5th of February 17, they donate £80 and they get as a benefit a book worth 30. That fails the relevant value test because the £30 is the value is worth more than 25% of the donation, and so that just drops out of gift aid completely. On the 11th of March, they donate £9,600 and they get a weekend break worth £450. For those of you rapidly running for calculators, 5% of 9,600 is £480, so 450 is less than that. It passes the relevant value test and it passes the aggregate value test because they've got a benefit and it's less than 2,500. On the 4th of April 17, they donate 50,000 and they get a package of benefits worth 2,500. That passes the relevant value test because it is 5%, it doesn't exceed that, but it fails the aggregate value test because they've already had a benefit of £450 in that tax year, so that one fails gift aid. So, what could we have done about that book? To get the book past the test, what you could have done is have a split payment. And here on this slide we're going to look at split payments and valuations. So they could have bought the book for £30 and then asked for a donation of 50, and that would have been absolutely fine. Valuations can be quite tricky. So if it's something that's on sale to the public, then the value is the sale price to the public. In other cases, it's what would the arm's length price be. So that, if you have a charity auction, for example, and you've got a ride-on lawnmower, it's hugely important that the auctioneer at the start of the auction says, and you can buy this ride-on lawnmower for £1,500, it will start me at £1,200, because If it goes for less than 1,500, you can't have any gift aid on it. But if it goes for 1,600 and the auctioneer has announced at the start that the market value is 1,500, then you can have gift aid on the £100 on top. So the valuations issue is quite difficult. If you've got a football that retails for £25, but it's actually been signed by all of the England football squad, that doesn't have a value, and you probably can't claim gift aid on anything of it when it goes for £1,000. Okay, so I said we'd talk about the benefits of gift aid, and this is one particularly to make your donors aware of. So a charity can, for a valid payment under gift aid, a valid receipt by the charity under gift aid, it can turn £1 into £1.25. If a non-taxpayer pays £1, the pound that they pay is treated as being net of basic rate tax. So if they've given a gift aid declaration, the charity says, that's great, I'll claim the 25p. But the non-taxpayer hasn't suffered it in the first place. So it costs them the 25p because the revenue will say, we'd like that money, please. For a basic rate taxpayer who pays £1, they've paid £1 out of what is effectively net income, it costs them £1. For a higher rate taxpayer who pays £1, it costs them 75p because they're a higher rate taxpayer, so they get 40% tax relief on £1.25. So the cost is 60%, 60% of £1.25, 75p. And an additional rate taxpayer, it's even cheaper. So please make your donors aware of that, because they can see actually they're getting tax relief, everybody wins. The final bit on there, and I've had examples of this with my own private clients, you can relate a gift aid payment back to the previous tax year. So if we have somebody who's about to do their tax return for the year ended 5th of April 18, we had a couple of these back in the autumn, they were about to make gift aid payments that were substantial. So provided you're in time to make your tax return, i.e. the tax return is not late, so it's before the 31st of January following the end of the tax year, your tax affairs are up to date, you can make a gift aid payment and relate it back to set against your income for the year ended 5th of April 2018. So somebody can make a gift aid payment in September 2018 and relate it back to their previous year's tax return ended 5th of April 18 and get tax relief on it. They just must not have filed their tax return. If they filed their tax return in July, can't do it. It's one of the best excuses ever I've heard for filing your tax return on the 31st of January. I was going to make a gift aid payment. Okay, last slide then now, some developments that are in the pipeline. There's one thing that isn't on that slide, which I'll just cover first, which is that the small donation scheme is going up to £30 from the 5th of April. And there aren't many tests that you have to do on this gift aid small donation scheme. The thing the revenue say is just be sensible. If you've got a £50 note in the church collection, don't try and claim it under the gift aid small donation scheme. But the donor benefits rules are getting simplified from the 6th of April this year, and it will simply be 25% on the first £100 and 5% on everything thereafter. So that brings me to the end of today's webinar. I hope you found that useful. If you've got any other questions or things you'd like to know more about on gift aid in the future, then please let us know. Thank you from me.
Thanks very much for that, Ian, and thank you for everybody listening. I said half an hour, and that was what, 28 minutes. So perfect. A couple of questions that have come in. Yes, we will be circulating the slides after this presentation, so you will get full copies of them. Ian, question. So how does gift aid apply to raffle tickets if the prize to be won have been donated? Would the value still be that to the general public? And how would this be figured out, i.e. which payments would relate to prices?
If the raffle ticket is being sold for a fixed price, then there is no gift aid on it. If you can buy raffle tickets at a £5 a strip and somebody gives you £10 and says keep the change, then you could claim the Gift Aid Small Donation Scheme on the £5 they've been given.
I hope that helps, Marlis. Another one, I've heard that some charity shops get gift aid declarations from donors of goods after they have been sold.
Yeah, I think that'll work. So if you get a gift there is a specified scheme for the donated goods scheme, which I won't go into today, but effectively what happens is you give your coat or whatever garment it is to the charity, you say, please sell it on my behalf, charity sells it on your behalf, and there may be part of the deal that they tell you within 28 days once they've sold it. They may charge you a small commission for selling it, which may attract VAT. But broadly, they say, okay, now here we are, we've got these proceeds from you. And you've already done a deal with them that says, oh, if I haven't let you know within 28 days, then you can keep the proceeds. And that's treated as a donation under gift aid.
Brilliant, thank you. If there are any more questions, then please put them in now. Otherwise, if there's anything more specific, please do feel free to either call or email Ian. The usual disclaimer, this is very much a presentation, and please do not take anything in this presentation as advice. We will advise on a case-by-case basis. If there are no more questions, I thank you all for joining. I hope that you'll join us again soon, and we wish you well for the rest of your day. Thank you, Ian, and thank you all.
Thank you. Goodbye.